Well, hello, folks. Welcome to 925 to Freedom. My name is Alex. So glad you found this channel. And in today's video, we're going to discuss the bloodbath that we have on the markets. Today is February 24th, 2025, and we've experienced yet another red day on the stock exchange. Wanted to go over the portfolio that we're building, our high yield dividend account, and see what the ramifications of this pullback that we've experienced on Friday last week and what we've seen today. Talk about what's going on in the news and see what we're going to take it from there. So I got a lot to cover. Let's hop right into it. For those who are new, I'm so glad you found this channel. In this channel, I discuss my career as electrical engineer. I talk about our real estate investments that we've done with single family homes. Also talk about this high yield dividend portfolio that I'm building that hopefully would one day replace my 9 to 5. So glad that you're able to find this. So folks, so glad we got more subscribers in this past week. People are finding out this channel. Good to see that. We're up to 19 subscribers. Thank you for watching that. We're getting some good views on these videos. So check them out. I'm making weekly videos on the performance of my high yield dividend account, which I've invested a little bit over $12,000 into. So tracking that performance. And then I have some review videos, talk about real estate and some of the work that I've done in the past. So check all this stuff out. It's free for everybody, information, knowledge, something I can share, inspire. So let's put that aside. Okay, so the markets, folks. This is the index of the market. We are in fear, 29% index. And you know what Warren Buffett says? When everybody is fearful, be greedy, and when everybody's greedy, be fearful. So this is just another small pullback. I don't think this is anything catastrophic. I think we're gonna see these type of events, especially with everything that's going on in the headlines with the tariffs that are about to be imposed starting in March on Mexico and Canada. We get a lot of imports such as lumber and oil from Canada. So there's going to be some movements in the markets, and people are taking an opportunity around that. So these are some of the hot stocks here that they're talking about. Now, another thing going on this week is NVIDIA's fourth quarter earnings report that's going to come out the 26th, which is going to be this Wednesday. So that's going to be interesting to see how that works out. You know that NVIDIA had a huge rally last year, and those who got in the right time made plenty of money. So that's something to watch out for. And I don't know if anybody noticed, but NVIDIA has been kind of the leader in the AI sector, and a lot of movements with other smaller companies are based on what NVIDIA is investing their money in. We've seen Palantir have a pullback after that huge rally we had last year when NVIDIA dropped Palantir. So it's interesting to see that how this company is shaping the technology industry around AI. Okay, so again, you know, some of these articles here, if you're scrolling, again, we're talking about tariffs that are about to happen. There's lawsuits in certain companies, so there's a lot going on. And I think historically speaking, February is usually the month that we see the pullbacks happen on the market. So I don't think it's anything to panic about. But you know what this channel is about is we're tracking our high yield portfolio. So let's hop into it, folks. All right, so what did we see happen to our portfolio? All right, so like I said in the beginning, invested a little bit over $12,000 into high yield funds. I actually invested $12,300 to be exact. These are some of the funds that I have been buying a little bit of single stocks and doing a couple of option plays also in this portfolio. I know it's not the cleanest to be able to track that, but I was just trying to take opportunity where I could. This is a hot ticker right now. This Novo Nordisk, this is a pharmaceutical company, and we might see a little bit of a rally. As you can see, we've seen a 10% gain since I've purchased it. But this is what's really important, is the rest of these funds, which are our high yielders, minus another single stock that I have here. Don't mind that one, but we're in the red, folks. As you can see, the only thing that really held up is JEPQ by JP Morgan. Everything else has tanked. Now, the ones on the bottom here, these are, we're going to get a dividend payout, and Fidelity does this thing that it, for some reason, doesn't tell me what my gains and losses are until that dividend rolls in. So we'll report on this by end of the week. But if we sort this by our gains and losses here, as you can see, the largest ones that took a hit are the YieldMax single stock call option plays for Coinbase, Coney, MSTY for MSTR stock, and we got TSLP from Curve that took almost a 20% hit since I bought into it. Pretty dramatic there. Now this is the one that came over the weekend. This one I was really disappointed about. So for those of you who aren't familiar with Cornerstone funds, CRF, CLM, these funds are a little bit interesting because they're closed-end funds. Basically, they only have a certain amount of shares. It's almost like Bitcoin, where they're guaranteeing not to make new shares and stuff. And this fund's been around for years, and there's a few folks that play this fund. They actually try to make a pretty nice living off of these funds. But one thing that they're supposed to give us a heads up on is the rights offering, and that's basically when you're supposed to sell everything off and then buy it back cheaper after the rights offering. Well, anyways, that alert didn't come in time, so we've seen a huge pullback over this weekend. 8.3%, 6.4%. Not really happy about that. As you can see, today's losses 10%, 7.9%. So I was a little bit disappointed about this. Wasn't expecting it. I thought I would get a little bit of a heads up on this rights offering movement, but that didn't work out. I just ended up holding these shares, didn't have a chance to liquidate them, to purchase them back after. But it is what it is, folks. We're not playing with a lot of money here. We're experimenting. I had about $4,000 into these funds, so we've seen some losses here, about 370 some bucks, 340 bucks, 380 bucks, and some other ones here. So this from Rex Funds, FEPI. Today we had a little pullback, 1.7. USA, I only have like 30 bucks in this fund. And then XPay, okay? So XPay, this one's been actually holding pretty steady. Overall, 0.09%, which is not bad. Now this fund, it's by Roundhill, it's supposed to pay us 20% per year. That's what it's aiming for. XPay, and again, like I said, JEPQ, we're still in the green on. So we'll see how these other ones come back. I know YMAX, YMAG, they've been negative. These are probably like 10% or so down. I'm curious to see how the Roundhill ones are. We'll see after we receive this dividend. And yeah, so here's our total account. So if you were watching my video last Friday, I believe we're like 12,700-ish or so. So we took quite a bit of a loss, folks. I didn't sell any shares, but with these drops that we've seen over the weekend, Friday and today, the value has dropped significantly. So how does that impact our dividend payment, expected payment? Let's go down here. As you can see, we're still showing $5,220 for this year expected to have that payout. So we'll track that and we'll see how that works out. We're going to have another dividend payout this week from Roundhill, of course. So we'll report on that on our Friday end of the week report. But wanted to show you guys what really happened, today from this market pullback. So and I felt it across, my other accounts, my long-term investment, my retirement accounts and stuff. Seen about a 2.7% pullback from the all-time high. So, obviously it's a little bit discouraging here, but it is what it is. That's what the market does. It can't keep climbing up. It's going to have these periods of pullback. So one thing that I wanted to point out with, I've been doing a lot of thinking about this stuff and doing some research, and wanted to update you guys that, as I mentioned in my previous videos, I'm in the process of selling one of my rental houses, and I'm going to use the proceeds to dump into these high yield dividend accounts. So when I get that lump sum of money, I want to make sure that I put them in the correct accounts, that I'm not going to, see the huge volatility and make the mistakes to lose this money. I want to make sure that it works out and do my due diligence. And that's why I'm tracking it with a smaller account right now. But what I'm coming to in a conclusion is that one thing to think about, obviously, is the tax ramification. And shout out to Oracle. He did a video on taxes. I believe it was yesterday or might have been today, but talked about compared yield max to the Roundhill and how yield max funds really are not efficient for tax purposes. You're going to be taxed on like 78% of the dividends that you're receiving, versus Roundhill, where they're paying out actually the return of your capital investment. So you won't be taxed on those, which are really, tax efficient. That's something to keep in mind. And then overall, I was just tracking the performance of these yield max, and I think I'm in the same boat as other folks are, as they're analyzing the fact that it feels like they're drawing us in with these high yield dividend accounts like the YMAG and the YMAX. But if you look at overall performance, I mean, so YMAG, let's see here, YMAG's been around since for about a year, right? And it's been down 14%, almost 14% since its inception. Okay, so if you're looking at from a NAV erosion point of view, and we'll see what they're saying that they're paying a dividend now. So they're paying a 40% dividend, okay? So if you do just like some simple basic math, I don't know why this is so slow, but let me grab a calculator here. So 40.24 minus, and what do we say we're down? 13.94. So, that's a 26% actual profit that you're going to get, as opposed to what they're advertising, the 40%, because you can have your account erode. And if you're dripping it, that's another thing to consider, is that if you're taking these dividends and you continue to reinvest back into the fund, yes, you're getting more shares, but also the shares that you're buying, they're going to continue to erode as well in value. So it gets really muddy when you try to like figure out what you're actually making, as opposed to, let's say, if we look at let's see here, XDT, right? So if we look at XDT, this by Roundhill, and we look at its 1-year chart. Well, folks, sorry that my internet's really slow today. That's down 6.35%, okay, from its all-time high. Now, as you can see, it's had it's had some dips. Okay, there's moments here. We're down to 49, and this was back August 5th, 2024. And then it would go up to 52, and then it would come down. It would go up, and then come down. So it's nice to see that. Now, if we compare that back to what we're comparing it to, YMAG, right? Compare that to YMAG. I mean, we start out at $21, and we had one opportunity really to climb up past that $21 mark, and that happened July 9th. And then after that, it's been deteriorating. Here we start out at $52, and we've seen highs as high as 53. We've seen, again, it hopped up to 53 back in December 2024. This looks a lot more optimistic. I know we're on the down low, and right now, probably a good time to get in. And looking at a chart like this versus a chart like this, as you can see, we're moving sideways and down here. Here, we're moving pretty much sideways. And I like that because if you look at what this pays, again, we're going to look at Round Hill. This has a distribution of 26.4%. Okay, so again, if we're moving sideways, would you rather have this, or would you rather be going down and you make a higher dividend, but you're also getting taxed more? So I'm kind of leaning more this way, and that's what I'm trying to analyze here. I'm leaning more towards the Round Hill funds, like I said, because they are returning you your capital investment, so you're not going to be taxed on that stuff. And then the other one that I like that they have is their XPay, and that's the one that pays 20%. That's what they're targeting. Let's see here where it is. XPay, right? So this is the one that they're targeting 20%, 19.82%. So if we look at that chart, now this one hasn't been around that long. This one is down slightly, 2%. So keep that in mind. It's been around only since November 1st at $57. But, it's had a peak at 60. So, we'll see. It's a little bit young to see, but I think that's reasonable. If we're talking about 20 versus, what YieldMax is doing, they're giving you the 40s, they're giving you the 60s. I think we've got to be reasonable, and I think taking advantage of the taxes is very important. So what am I waffling about? Okay, so once I get this money, folks, and this is going to be a pretty large amount. I'm not going to say what it is right now, but once it pops in my account, will be interesting to match. But I think I'm going to retire these YMAGs and YMAX. I might keep them. I'm not going to sell them. I don't want to make any taxable events or whatever, but I'm leaning more towards Round Hill. I'm going to do the RDT, XDTE, QDTE, XPay. I even like the JEPQ. This one actually has growth, okay, which I really like. I mean, they're not paying a lot. I think they're paying like 15% or something like that. It's pretty conservative. This fund's been around for a while. longer than the other ones. It's been around since 2022, which was not the best year ever. And the shares back then were $49. We saw that dip down to 40, but we've seen this growth, and I really like seeing that growth. Okay, so I think this is going to be another one that I'm going to invest in. I like seeing that it's not eroding. It's not paying out as much as these other ones, but I want to have something left over. And they also have JEPI, which is another one, JEPI, and I might consider some of these. So we'll see what I'm trying to find. Well, I guess my positions will have it, right? So if we go to dividend view, JPQ, right? Okay, so that's dividend yield 9.64%. I thought it was higher than that. Yeah, it is 9.74. So I'm mistaken, folks. So it's pretty, it's on the lower side, 9.74, but you're getting that growth. So you're not, and I guess it depends on what you're trying to do. If you need that money now, probably Round Hill would be better. But these ones, if you want to see some growth and get some dividends at the same time, this is probably a nice middle ground one. So I'll probably be putting some money into this one as well. These other ones, though, these single ones like Coney, Misty, Curve, TSLP. I don't like seeing those huge drops. So I don't know how I'm gonna live with that. Seeing that 20% drop in less than 2 months. What's gonna be left of my account, and then what they're gonna do, a reverse split. I don't know. Anyway, so I don't want to make this long, folks. This is just an update. Like I said, we've seen some pullback. We're seeing some reality. How do these things perform? And it's actually nice to see a pullback like this that's not too drastic, and not having a large account where I'm like panicking about it, and to actually analyze these funds. So in a way, I'm kind of glad it happened now before I invest all my money, because initially I was really feeling the the yield max funds. I was really thinking to go more heavy on YMAX and YMAG, and I'm really glad to be able to see this pullback, to see how they performed, and also had the opportunity to do some research on the tax implications. So that's what I wanted to review here with you guys. Hopefully you found this interesting. Let me know in the comments below, do you like the YMAG, YMAX, or are you liking the Round Hill, and why? And if you do invest in Cornerstone, please leave a comment. I want to see if you did sell before that N2 announcement on Friday that happened, or if you're holding the bag like I am and has seen that 10% decrease. So glad you found this. Please give me a thumbs up, subscribe to this channel. More content in the future. We're going to build this portfolio, folks. We're going to learn this together and be able to leave that 9 to 5 eventually. So thank you very much. We'll see you on the next one.